Everything you've been told about buying a home is a lie. All right, that's a major exaggeration, but I bet there's one big lie you're believing right now, and that's you've been told that waiting for lower interest rates is really your only hope to save money in this current housing market. I get it, you're running the spreadsheets, checking the news, and you're probably watching the Fed like a hawk. But honestly, you've been going about this wrong all along. The one thing your mortgage calculator is leaving out: human psychology, or what we call buyer behavior. And listen, your well-meaning friend or family member has probably never bought a home in a market just like this one we're in right now. And by holding out for a lower interest rate, you are unknowingly preparing to hand over an extra $50,000 in purchase price to a complete stranger. So in the next 5 minutes, I'm going to show you why a high interest rate is actually the only thing keeping home prices from exploding, and how you can use this window of time that we're in right now to gain a level of leverage that 99% of buyers never will. And stick around for some hidden math, because I'm gonna prove to you why the perfect rate is often the most expensive mistake you can make. I've already alluded to this colossal mistake that most home buyers are making in 2026, and that's trying to time interest rates instead of understanding leverage. Here's what most buyers never think about. Interest rates don't exist in a vacuum. They directly influence buyer behavior. Think about it. When rates drop, buyer demand increases immediately, right? The headlines go up, rates drop 1/4 of a point. Every buyer who's been waiting rushes out to the market. But home inventory doesn't increase at the same speed, right? Sellers need time to get their house ready to sell. So when rates drop, the current sellers gain all the leverage. And what happens to prices? They go up. So even though the rate is lower, buyers are going to pay more for the home. And in the process, they're going to probably have to waive a lot of their protections and definitely lose the majority of their negotiating power. So on your spreadsheet, the monthly payment might look pretty similar, but your risk and your total costs are significantly higher. Hey, by the way, I'm Chris Grano. I'm a real estate agent here in the Chicago suburbs. And this is why my preferred strategy is so simple. Buy when competition is lower and refinance when rates drop. There's one key idea most buyers miss. You can refinance an interest rate, but you can't refinance the price you paid. Buying when competition is lower, and I know it doesn't feel like competition is lower, but trust me, if rates drop more, competition of today will be something you wish you saw in 6 months. So here's what it does. It gives you more negotiating room on the price. It gives you access to seller concessions that might lower your cash to close. And it definitely gives you stronger inspection and appraisal protection. And that leverage matters a lot more than a fraction of a point on an interest rate. Now let's talk about that hidden math I promised, because this is the payoff that changes everything. If you overpay for a home by $50,000 because you were waiting for a lower interest rate to make the payment feel better, but now the competition is significantly higher, that higher price affects your loan balance forever. It increases your property taxes every single year. It increases your insurance costs, and it permanently reduces your future equity. So even if rates drop later, that now inflated price you paid and the interest on that extra $50,000 stays with you for the life of the loan. But if you buy at a better price now with a little bit less competition, you can refinance later. You can lower your payment and keep that $50,000 in equity you gained from buying smarter. That's long-term thinking, not just market guessing. Now listen, this strategy isn't for everyone. It works best if you have a plan to stay in the home for more than a few years. So this is for my long-term thinkers, not somebody trying to game the market. You want to make sure you have stable income and you're focused on long-term financial health, not just headlines. If somebody needs the lowest possible payment today at any cost, no matter what the future looks like, well, I guess waiting might feel better, but it usually comes with trade-offs that buyers don't realize, honestly, until it's too late. The goal isn't the perfect rate. It's a strong financial position. This is big boy, big girl stuff. So if you're buying with this strategy, a few things really matter. Number one, and most important, work with a lender who understands refinance planning. Not all mortgage lenders structure loans with future refis in mind. They're usually just trying to get your business right now, and they'll worry about other stuff later. If you comment future savings in the comments below, or check the video description. I'll send you a link with info about an exclusive lending partner I use to save my clients thousands on future refinances. It's honestly the perfect future-proof loan program. Next, you'll want to negotiate aggressively as you can up front, right? Price, concessions, and repairs, these all matter when there's slightly lower competition. And you're gonna wanna talk to your agent about what negotiating power you have currently in your market. My area, Chicago suburbs, might be different from Florida or California or Arizona. And finally, do not forget this one, and this is why working with a great lender really matters. Track rates after closing, right? Because you want to see when that opportunity pops up, and it can honestly come and go in a moment. Refinancing is a true financial move. It's not a hope. This is a proactive strategy we're talking about, not just luck. So listen, interest rates matter, but leverage matters more. The buyers who do best aren't waiting for the market to feel comfortable. They're buying with intention, and then they're adjusting when the opportunity is right. If you want to understand whether this strategy makes sense for you, reach out directly by email or DM me on Instagram at Chris Grano Realtor. I'll walk you through what buying now and refinancing later could realistically look like in your situation.